$90 oil, does it get to 100? Is it sustainable?
I think that we all in the industry have an opinion on oil prices, but usually we're wrong. So rather than answer that directly, I would like to say that the fact is that since China, Brazil, India, and Russia really had their growth in GDP spurt back in 2004, real WTI prices have averaged more than $80. And so I really think that now, to me, that indicates that the mid-cycle price of oil is around $80. Now, the reason Prince Abdulaziz has been doing what he's been doing recently is to balance the markets. Because there was a time of overspend followed by a long period now of underspend in the industry and then the pandemic. So now to balance the markets is best for all of us, because if prices, if he wasn't doing that, then prices could potentially go way up to over $100. But in balancing the market, you protect the downside so that you have a healthy oil and gas industry, but also without damaging economies around the world.
So some of the underproduction or undersupply was because you guys, shale players, so are you doing anything differently if we're at a mid-cycle price of 80 and we have spurts to a 90?
I think that certainly our industry has gotten to the point where we are practicing much more discipline than we used to practice. You see that that prices have been moderated recently, that a lot of people have predicted $120 to $130 oil. You haven't seen it because the industry doesn't want to go there. Since in that time period that I just described, since 2004, prices were above $100 26% of the time. I don't think we'll see that again. I think
Vicki's still capital disciplined, or Vicki's going to pump more?
We're capital disciplined, and what that means for us is that we don't increase oil significantly in a market where we don't see the balance. It would only be in a market where we see the balance that we would increase our production, and then it would be at a moderate pace. We really are much more focused on returns than production volumes.
Any recessionary things that you're noticing or fears? Any demand destruction? Like, are you noticing anything on the backside in terms of demand for you guys?
We don't see any demand destruction at this point. I don't think that if prices went above 100, that it would stay long enough to destroy demand. I really think that we're continuing to see a gradual improvement. And I think even in a recession, I don't think that demand would drop so significantly that it would drop prices.
So we're here at an energy security summit. And part of the line is going to be like, let's unleash American oil, right? If you unleash American oil, oil can go to $40 a barrel, $55 a barrel. You're not going to want that. You're going to need higher prices. So if you got the go-ahead to be like, you can do whatever you want, Vicki, would you? Can you? Are there other constraints?
The constraints really are making sure that you increase value, that you don't destroy value. If you look in those, that 20%, 26% of the time that prices were above $100, a lot of value was destroyed because we drove up the cost of what we were doing. We were inefficient at that activity level, the industry in general. And so now I think there's a lot more discipline around how to do it better, and not to get into an oversupply market.
So if I look forward for Oxy in the next 10, 20 years, you guys are going to basically be a carbon management company, and a big part of that is direct air capture. You suck some carbon out of the air and you either store it or you use it to get more oil. You recently announced that Amazon's going to purchase about 250,000 metric tons of carbon removal credits over 10 years. Huge. It's a big part to get that plant built. What are the financial terms of the deal?
I can't say, but I can say this, that since we started working on selling carbon reduction credits a couple of years ago, the voluntary compliance market has continued to grow. More and more companies are wanting to offset their carbon footprint. There's more than 2,800 companies around the world that have goals to reduce their carbon footprint or neutralize it. Therefore, prices are starting to go up for carbon reduction credits. We can't share prices on contracts, but we can say that we believe that this is certainly encouraging us to know that we can do this and do this in a commercial way. And the important thing to remember is that what we're building here is a technology that the world desperately needs to reduce CO2 out of the atmosphere. And in doing that, what we can do too is provide value to our shareholders. But because if we can't do that, it's not sustainable.
So let me ask it a different way. How hard was it to come to a price with Amazon, or how easy?
I would say that this is a growing industry. An industry is developing out of nowhere to.
This is hard. This is CEO speak for hard. Is that?
This is hard.
Okay, so it's hard.
It's hard. I don't think that we've negotiated a contract yet that didn't take almost a year or more because people are just starting to understand the industry. Our legal people have never written contracts like we're writing today. So we're at the forefront of this, and I feel like we're leading the way in a lot of ways, especially with respect to these large volumes and and matching that with what companies need to fulfill their goals.
I'm going to ask you one more in a different way, one more time. You get a tax credit for direct air capture of $180 a ton to decarbonize, depending on where you put it, in the ground or back to oil. You have said that companies will be willing to pay above that. Did you learn that that is true with Amazon?
I never can talk about prices on any given contract.
But did you feel good? Did you feel a sense of relief?
But I can say that to make this commercial, there's more than one thing happening.
Okay.
We're also going to, over time, be able to significantly lower the cost associated with these carbon credits. So it's not just the sale, it's not just what you get for it, it's the cost of doing it. So balancing the two of those and getting to the optimum point is where we're headed, and I feel confident we'll get there.
Fair enough. What do you say? So we're at the Energy Security Summit. I know that carbon management is going to be huge over the next, 10 hours here. What do you say to those who say, yeah, but that's just an ability to let you pump more oil? I mean, you've said that you're going to use that carbon to get more oil out of the ground, so that's not going to do anything for us. What do you say to that?
I say that what they don't understand is all the benefits of doing this, because it takes more CO2 injected into the reservoir than what the incremental oil produced from that CO2 will emit when used. So what it does is it creates a carbon zero or carbon negative barrel of oil. And maritime and aviation needs carbon neutral oil to make their jet fuel and their maritime fuel. It's very much needed for that. The second thing it does is it's further lowered, the intensity is further lowered by the fact that you're using infrastructure that's already there. So getting more out of existing reservoirs is a lower intensity, carbon intensity barrel of oil. So that helps. And then the third thing is that it's very important for the world to produce reservoirs like this, because if the industry adopted this all around the world, this is the best thing that could happen from a climate change perspective, because the last barrel of oil produced in the world should come from this kind of reservoir. And especially here in the United States, where we have vast resources and great resources to develop, those resources are not infinite.
And lots of rocks.
And so it's really important to get the most barrels of oil out of the reservoirs we have in the United States. And we can do that today. We have the infrastructure in the Permian to begin there. And then as we begin there, expand that, we can do it in the rest of the areas here in the United States. That guarantees more energy independence for the United States.
I like the pitch. It's a pitch. She did her pitch. It was a good pitch. Before I let you go, just to tie into what's happening in the broader world, yields are higher all across the board. Is that impacting how you're doing with Oxy at all, or how are you looking at that? Does that tell you anything?
I think that it's important to that happens for a healthy industry.